Good morning. Today let's discuss about cash flow statement. Statement of cash flows in International Accounting Standard 7 and Indian AS 7. It is stated in Standard 7. Okay. Then the statement of cash flows, also referred to as the cash flow statement, is one of the three key financial statements that reports the cash generated and spent during a specific period of time. Okay. Statement of cash flows, we have already discussed about profit and loss statement, balance sheet, and also statement of changes in equity, like that. So statement of cash flows is also an important statement of an entity, okay, that report the cash generated and spent during a specific period of time. Okay, that is a month, quarter, or a year. It depends. That means the change or the inflow and outflow of cash is being recorded in the cash flow statement. The statement of cash flows act as a bridge between the income statement and balance sheet by showing how money moved in and out of the business. The statement of cash flows act as a bridge between the income statement and balance sheet by showing how money moved in and out of the business. We know P&L account shows how money have moved, that means expense and income. It has been showed in the P&L, and in the balance sheet we get to know the particular position, or on a particular date what is the position of the business. So the statement of cash flows is a bridge between these P&L account as well as balance sheet. Okay. Then three sections of the statement of cash flows are: one is operating activities, investing activities, and financing activities. Cash flow is being divided into three sections. One is operating activities, second is investing activities, and third one is financing activities. Operating activities, what does it mean? The principal revenue generating activities of an organization and other activities that are not investing or financing. Any cash flows from current assets and current liabilities. Okay, so operating activities means those activities which are revenue generating. That means it is related to the day-to-day operations of the business. Okay, that means it is not investing or financing. That means investing activities means those activities where we invest funds, like that. And financing means those activities related to raising of fund. So operating activities is concerned with the main activities of the business. Okay. Next is investing activities. Investing activities, any cash flows from the acquisition and disposal of long-term assets and other investments not included in cash equivalents. Okay, investing activities means cash flows from acquisition and disposal of long-term assets. That means mainly those of investment purposes. Any outflow or inflow of cash related to investment, that is investing activities. And last is financing activities. Any cash flows that result in changes in size and composition of the contributed equity or borrowings of the entity. So financing activities means an enterprise will be having different funding sources: equity share capital, debentures, preference share capital, like that. So they will be paid interest, dividend, like that all. So all those inflows and outflows related to these aspects are treated under financing activities. So cash flow statement is being divided into operating activities, investing activities, and financing activities. Okay. Now cash flow definitions. Some of the main cash flow definitions are: cash flows. Cash flows means inflows and outflows of cash and cash equivalents. Cash is a thing, and similarly cash equivalents is also a thing related to cash. So cash. Cash means cash on hand and demand deposits. Cash balance on the balance sheet, that is mainly related or treated as cash. Cash equivalents means it includes cash held as bank deposits, short-term investments, and any very easily cash convertible assets. Includes overdrafts and cash equivalents with short-term maturities. Okay. So cash equivalents means it include cash held as bank deposits, short-term investments, and very easily cash convertible assets. Okay, so these are the main definitions. One is cash and the other one is cash equivalents. Next, we have already seen that there are different divisions like operating activities, investing activities, and financing activities. Now let's see what is operating cash flow. Operating activities are the principal revenue producing activities of the entity. Operating cash flows typically include cash flows associated with sales, purchases, and other expenses. That means all those expenses or inflow and outflow of cash which is directly related with the operation of a business. That is operating activities cash flow. Then the company's chief finance officer chooses between the direct and indirect presentation of operating cash flow. That means operating cash flow can be calculated in mainly two ways. That is, one is direct presentation and the other one is indirect presentation. Okay. So direct presentation, how will record the transaction? Operating cash flows are presented as a list of cash flows, cash in from sales, cash out for purchases, etc. Simple but rarely used method, as the indirect presentation is more common. Indirect presentation. Okay, so there are mainly two type of presentation or presenting operating cash flow. They are mainly, one is direct method and the other one is indirect method. In the direct method, we directly write the operating activities inflows and outflows and calculate the cash flow from operating activities. Whereas in indirect method, we do a reverse working from the net profit before tax. That we'll see in detail. Okay, so this is operating cash flow. Operating cash flow is being calculated in mainly two ways, that is direct and indirect, and commonly we use the indirect method of cash flow calculation usually. Okay, next is investing cash flow. We have already discussed what is investing cash flow. Investing activities are the acquisition and disposal of non-current assets and other investments not included in cash equivalents. Okay. So investing cash flow means they are the acquisition and disposal of non-current assets and other investments not included in cash equivalents. Investing cash flows typically include the cash flows associated with buying or selling property, plant and equipment, other non-current assets and other financial assets. Okay. So main things or main activities in investing activities are cash flows associated with buying or selling of property. That means mainly long-term capital assets like plant, property, equipment, machinery, etc. So investment or the amount spent to buy all these things will come under investing activities cash flow. Then cash spent on purchasing plant and machinery, plant, equipment, property, etc. is called capital expenditure or CapEx for short. Okay. So we know investing activities mainly concerned with capital expenditure nature items. So those are the cash flows we will record in the investing activities. Next is financing cash flow. Financing activities are activities that result in changes in size and composition of the equity capital or borrowings of the entity. Okay, so we have discussed financing activities means those activities related with the raising of fund and related terms. Okay, that result in changes in size and composition of the equity capital or borrowings of the entity. That is mainly related to the funding. Okay, financing cash flows typically include cash flows associated with borrowing and repaying bank loans and issuing and buying back shares. Okay. The payment of a dividend is also treated as a financing cash flow because dividend is paid to the shareholders. Shareholders means or shares means the funds we raise for running the business. So all those expenses and incomes related to funding in a business will come under financing cash flow. Okay. Now, calculation of cash flow from operating activities. We have already told that operating activities calculation, there are mainly two methods. Okay. Cash flow from operation means cash generated in the business as a result of producing goods and services. It can be ascertained either by direct or indirect method. Now let's see direct method. Under the direct method, major classes of gross cash receipts and gross payments are disclosed. In this method, cash receipts from operating revenues and cash payments for operating expenses are calculated to arrive at cash flows from operating activities. The differences between the cash receipts and the cash payments is the net cash flow from operating activities. Okay. So how we'll calculate cash flow under direct method? The format will be like this. Cash received from debtors, cash paid to credit. So, okay, all those items which are income or inflow of cash, we'll record it in positive figures, and all those items which is outflow to the business, we'll record it in negative terms. Okay, so cash received from debtors, it is an inflow. Then cash paid to creditors, cash paid to employees, cash operating expenses paid, interest paid, etc. Okay, all these are directly related with this interest is not related with financing interest or debenture interest. It will be any other interest relating to the operating activities. So all those incomes and expenses which are directly related with the business like purchase, sale, like that all will come under cash flow from operating activities. So we'll write the positive figures as well as negative figures, and we'll calculate the net amount, that is the difference between cash receipts and payments, that is net cash flow from operating activities. This is the calculation of cash flow under direct method. Next is indirect method. Okay, now let's see what is indirect method. Indirect method is also known as net profit method or a reconciliation method. This method starts with net profit or net loss as per the profit and loss account. Okay, so under indirect method we'll start, or the format will start with net profit or loss as per profit and loss account. The net cash flow from operation is determined by adjusting the net profit or loss for the effect of, and first we'll write the net profit or net loss as per P&L account, and from there we'll start the calculation, or we'll start a reverse working. Okay, non-cash items such as depreciation, provision, deferred taxes, unrealized foreign exchange, all these will adjust. We'll see how we'll adjust. Then changes during the period in inventories and receivables and payables, that is change in current assets and current liabilities. All other items which affect cash included in investing and financing activities such as loss or gain on sale of fixed assets and investments. Okay, so these are the main things which we'll adjust from the net profit. Okay, so why we'll adjust, or why we adjust this depreciation provision, then changes in inventories or loss on sale of fixed asset, why we adjust all these items is that while preparing the P&L account, we know we have recorded all these. Depreciation we have recorded, loss on sale of fixed asset we have recorded, isn't it? But depreciation is a non-cash expense. Actually, depreciation means a provision which we are keeping aside for the deterioration of an asset. But it is a non-cash expense. Isn't it? Cash flow statement only records only those cash expenses and incomes. So depreciation, as it is a non-cash expense, it should be eliminated. Or once we have deducted it from profit, so we have to add back it. Okay, similarly, it is the concept of loss or profit on sale of fixed asset. In those cases, the profit which we receive, it is not actually cash. What? It is not directly related with the business. So we have to add back, or we have to reverse the working of that. That is why under operating activities, we reverse work all these. Okay, now we'll see the format. Then indirect method is widely used, and this method is specially used when amount of sales is not given in the question. Okay. Now let's see the format. Okay, all these are not what? Under direct method and indirect method, only cash flow from operating activities we have been calculating. Okay. So cash flow from operating activities under indirect method will be in the following format. First heading is cash flow from operating activities, then net profit before tax. This is the first item we'll write, and we'll add back non-cash, non-operating items. Okay, that is what. Either it will be non-cash items, that means no cash inflow or outflow, so we have to add back, or non-operating. Actually, we are calculating cash flow from operating activities. So if there is anything which is not related to operating activities, we have to avoid it. That's why we add back loss on sale of fixed asset. Actually, we have already recorded it in P&L, but it is not related to operating activities, but it is related to investing activities. So we have to write it in cash flow statement. We'll write it under the head cash flow from investing activities. So here we have to add back, because in P&L we have already deducted it. Okay, so the items which we have to add back with net profit are depreciation, preliminary expense is written off same as depreciation, then discount on issue of shares and debentures, goodwill, loss on sale of fixed asset, provision for doubtful debts, dividend paid, underwriting commission, etc. All these are not at all related with operating, or it will be non-cash items. So we will add back. Okay. Next is the items we have to deduct, that is rent received, interest received, dividend received, profit on sale of fixed asset. All these are related with what? Investing. Rent received, we know it is related with investing activities, because rent will be received for a thing we have invested or any let out property. Then interest received will come and financing activities. Dividend received also financing activities. Then profit on sale of fixed asset also, it is an investing activity. So we have to deduct these items, since we have all credited these items in the P&L account. Okay. So we'll adjust these two, that is net profit before tax. We'll add all these and we'll deduct all these. Then we'll get operating profit before working capital changes. Okay, operating profit before working capital changes. With that, we have to again add decrease in current assets and increase in current liability. That is a rule. We have to decrease current asset. That means we'll be given opening and closing balances of current asset. So if there is any decrease in any current asset, we have to add back. And similarly, if there is any liability, any current liability increase, we have to add back. Similarly, we have to deduct increase in current assets and decrease in current liability. Okay. So operating profit before working capital changes. With that, we have to add these and deduct this. Then we'll get cash generated from operation. So this is the format of calculating operating cash flow or operating cash flow under indirect method. This is the method we have been widely using. Okay. So this is the cash flow. So we have only reached the cash flow from operating activities, and usually we follow this method. So this method you have to study the format. Okay. Now general cash flow statement format. This is the format. Particulars amount. First will be cash flow from operating activities, and that cash flow from operating activities calculation is being discussed this. Okay, so the first heading, cash flow from operating activities, under that will come this format. Okay, so we'll get cash flow from operating activities. Second one will be cash flow from investing activities. So under investing activities, there is no direct method or indirect method. Just we can add all those incomes in investing activities and all those expenses, which are the incomes in investing activities, like what rent received, that will be an income from investing activities, or if any rent paid or interest paid for any building like that, then it will be outflow. So we'll net effect, will add the incomes and deduct the expenses or outflows of cash, and we'll get cash flow from investing activities. Similarly, we'll get cash flow from financing activities. Okay, only cash flow from operating activities have a working. That means this format have to be done. Other one you have to write like this only: cash flow from investing and cash flow from financing. Thus we will get three cash flows: cash flow from operating, cash flow from investing, and cash flow from financing. Once we get these three, we have to add back all those. Okay, and that will be net increase or decrease in cash. Okay, that means if these three figures are positive, we'll get net increase in cash, because our cash flow has increased, cash inflow has increased. So that will be called net increase in cash. Or if we get a negative figure by adding these three, then it will be net decrease in cash. Okay, with that we will add cash at the beginning of the period. We will be given a balance sheet in the question, and the opening cash balance or the opening balance sheet cash balance, we'll add back it, add cash at the beginning of the period with this amount. Okay, then we should get cash at the end of the period. That means we'll be given a closing balance sheet cash. So while calculating all these, and with that if we add cash at the beginning of the period, we should get cash at the end of the period. That is, then we have done, or our cash flow statement will be correct. So this is the format of cash flow statement, and this is just the format of cash from operating activities. Okay, so this will also come under the format. Inside the format, cash flow from operating activities will be in detail like this in this format. And the other two will be simpler: cash flow from investing activities and cash flow from financing activities. Once we get these three, add these three, and we'll get net increase or decrease in cash. And with that we add cash at the beginning of the period, and we'll get cash at the end of the period. Then it's done. That's the cash flow statement. Okay, so this is the cash flow statement. Cash flow statement, we record the inflow and outflow of cash, and it is divided into mainly operating activities, financing activities, and investing activities. Operating cash flow we record mainly in two types: one is direct method and the other one is indirect method, and the indirect method is widely used. And the format of cash flow statement: cash flow from operating activities as per indirect method. Then second one will be cash flow from investing activities. Third one, cash flow from financing activities. And by adding those three, we get net increase or decrease in cash, and with that we add cash at the beginning of the period, and we'll get cash at the end of the period. That's the cash flow statement. Thank you.